Hey everyone, Ian here. I like purchasing dividend-paying stocks like Air Products and Chemicals. I started buying that stock, ticker APD, back in 2013, so it's been about 10 years. I like buying these types of stocks because they pay dividends, and I can use those dividends to pay my bills, to pay my living expenses. They automate my income, if you will. I started buying APD, Air Products and Chemicals, back in 2013. I started buying that at $95 and change. Right now, that is actually trading for $318. So on capital appreciation alone, I have done quite well, but I really don't worry about that. It's nice to have, but I never plan on selling. The reason I own Air Products and Chemicals is because they have increased the dividend so many times consistently over the years. And my simple yield on cost right now on that stock is actually 7.4%, which is pretty awesome for a qualified dividend in a company like APD that is so exciting and I think defensible. They're in a very defensible business model, and they don't get caught up in a lot of drama like some of the higher profile companies that I own. But I digress. I'm not Snow. I'm not the rapper Snow, but I am here to inform you all today that the dividend snowball effect is real. I want to discuss in the video today for both beginners and seasoned investors alike why dividend stock investing works. And what I just shared with APD, it's kind of the tip of the iceberg, if you will. There are three main levers. There's a bonus lever, number 4, that make dividend stock investing work over long periods of time for people like myself who use dividends to pay bills. And I want to explain that snowball effect in the video today. Get ready, everyone, for a really exciting dividend stock investing video. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone. So I'm back here with my 3M Post-it board. Please go ahead and put a comment below if you remember the PPC Ian videos from the original days when I was in my old house in the corner and I was doing the videos with this board. I'm so excited to be back doing it old school style. As you can see in front of you right now, there are 3 main levers, but there's a 4th bonus lever as well. What you see here really is a whole bunch of snowballs. I did my best to illustrate this, but the philosophy is that the snowball starts really small, but as it rolls downhill, down the slope, it gains more momentum and it builds in size, and eventually it becomes an avalanche of sorts in terms of the biggest snowball that could ever exist. Now, the snowball with just any one lever, it will grow over time and it will grow really well. But when you start combining these levers, that's when the slope starts getting steeper and when the snowball gets bigger a lot quicker. It's funny because the example I shared in the introduction today, my simple yield on cost on Air Products and Chemicals, that actually is only my simple yield on cost, which is really this first lever, lever number 1. And basically what that means, and what I want to start with, is the first bit of magic that makes dividend investing work for people who want to live off of cash flow is the simple effect that companies like Air Products and Chemicals, as they do well over time, as they grow their businesses, as they increase revenues and profits and earnings, these companies like to reward shareholders, and they do so by increasing the dividend on an annual basis, typically over long periods of time. Now, not all dividend stocks do this, but the types of dividend stocks that I like to own, typically speaking, they do this. They have a track record of increasing dividends year in and year out. And so you can see just at the top of this thing with lever number 1, The slope, it's not that steep, but nonetheless, that slope is real. The snowball gets bigger. We all know right now that air products and chemicals, the starting dividend yield is in that 2% range, and it's always been in that 2% range because the stock price goes up over time and it kind of balances out the starting yield. But my yield on cost is 7.4 on a simple basis, not including reinvested dividends, because the snowball gets bigger over time. Air products and chemicals has rewarded me over time with more and more dividends, with higher dividends, with more cash flow year in and year out because their business has done well. And so a lot of dividend investors, quite frankly, that's a big enough snowball for them. If the amount of money that is deployed to begin with, if it's big enough, that is enough of a snowball effect right there to retire. Such dividend investors can buy a stock like air products and chemicals. They can take the money out of it, the dividends out of it each year. That stream of dividends increases over time, so it can oftentimes keep up with or even surpass inflation. I know air products and chemicals just increased their dividend by a staggering 8%. I certainly think that is above our long-term rate of inflation. Maybe inflation's a little higher now, but certainly not over long periods of time. And so some dividend investors, that's a big enough snowball, especially for investors who have larger amounts of money to deploy right away. But for a lot of investors, that's not enough. So there's another lever that gets this snowball bigger quicker. It gets the snowball going down a steeper slope. It takes the value of the dividend increases, but it makes even more leverage on it. It drives even more results on it. If that investor can afford to delay, fire, or financial independence, retire early a little bit. This is what is called dividend reinvestment. Instead of those dividends, when they're paid out, if I just take them to go pay bills, instead of doing that, if I continue to have a job, if I continue to work, I continue to grind it out, and I delay financial independence, retire early, I can take my dividends from air products and chemicals, or really any dividend stock that I have, and I can reinvest them back to purchase more shares of the same company or of a different high quality dividend paying company. And those more shares that are purchased in turn yield more dividends, more cash flow. And it is a cycle. It's a recursive algorithm, if you will. If you have a computer science background, the thing that I love most about dividend stock investing for those that reinvest dividends is it really is a recursive algorithm, which means the dividends get paid. The dividends buy more stock. In turn, the more stock pays dividends. Those dividends get reinvested again to buy more stock. So on and so forth. The cycle keeps repeating. And so that's why you see here in this illustration that we have number one lever, but number two, it takes the slope, it takes the trajectory to the next level. The snowball can get bigger a lot quicker with dividend reinvestment. And typically I like to reinvest my dividends. Now, something important for all dividend investors to understand is that when a dividend is paid here in the United States on most of the kinds of companies I own, such as air products and chemicals, the dividends are called qualified. And what that means is they're taxed as long-term capital gains. And so there is a tax consequence on dividends. And that's something to be mindful of as a dividend investor, especially for someone who works, because there could be a tax consequence at the end of the year, depending on where income levels are. Typically for most people who are working, if they're above certain thresholds and they already file a tax return, there is a tax consequence for dividends, even dividends that are reinvested. And so that's important to keep in mind. Still, I look at dividends as one of the most efficient mechanisms for getting cash flow to the everyday person to pay bills. Because as of now, at least, qualified dividends are taxed as long-term capital gains, which is a lower favorable tax rate. But please do consult your licensed tax advisor. I'm not offering tax advice. I'm not a licensed tax advisor, but that's something I did want to mention as it pertains to reinvestment, because a lot of people forget that. They don't think about that. They don't think it pertains when dividends are reinvested, but no, it does pertain. But I want to hop forward to the third lever. one of the more important levers if someone wants to accelerate this, because I know when the snowball effect starts, the snowballs are smaller. It takes a while for it to build. But I can tell you, I've been in the game now for over 20 years. The snowball really does start building big over longer periods of time, especially when there's been a decade or more invested in high quality stocks that increase dividends year in and year out. But the third lever in which to accelerate that snowball is net new capital deployed. And so I have right now shares of Air Products and Chemicals. They pay dividends. I can choose to reinvest those dividends and create a recursive algorithm that builds even more cash flow over time, steepens the slope, as you can see here in the illustration. But with the third level, I can take that slope even steeper. I can make it super steep by throwing more money at the problem as well. This is one of those cases, I know sometimes in society we have a problem and we think, hey, can we solve it by throwing more money? And sometimes people say, no, you can't solve that problem by throwing more money at it. I'll tell you, in my personal experience, at least with stocks, with automating income, the problem, if you will, of automating income and living off of cash flow, certainly throwing more money at the problem has worked historically for me. And that's the third lever. I can choose to purchase more shares of Air Products and Chemicals. I can go out on the market and just say, hey, I'm going to put in another 1,000. I'm going to put in another 5,000, another 10,000, whatever it is. I can put more money, or I can be a smaller investor. I do $100 at a time, whatever it is. It doesn't matter. Every little penny, every dollar counts, especially now that trades here in the US, there's no commissions typically speaking. And so, boy, smaller tranches, why not? But I can go and I can throw more money at the problem. And when I throw more money at the problem, I buy more shares of Air Products and Chemicals. And the more shares I buy with money I put into the system, hopefully I buy those shares at attractive valuations. Those shares in turn pay more cash flow. And if I choose, I can reinvest those dividends to buy even more shares that pay more cash flow. And those shares will pay dividends that I can choose to reinvest to buy more shares that pay cash flow. And so that's really the third lever that I wanted to discuss today. I have a fourth bonus lever as well, but when I combine levers 1, dividend increases, levers 2, dividend reinvestment, lever 3, the net new cash infused, this snowball becomes enormous, especially over a period of time like a decade. And that's what this is supposed to illustrate all the way at the bottom of this whiteboard, how the snowball can get so much bigger. And it really is a miracle to behold, if you will, especially once you've been in the game a long time like I have. You start seeing this unfold. But there's a reason I was talking about the tax consequences earlier of dividends. When dividends are paid, dividend investors, typically, there's not a lot of taxes being a set it and forget it dividend investor like myself, because I'm not really trading stocks. I rarely sell stocks. So paying capital gains taxes on selling stocks, it's rare for me because I just don't sell stocks. I buy and hold forever. But as I mentioned, there are taxes when dividends are paid out. The fourth and final lever, and I didn't really illustrate, it's kind of a bonus lever, if you will, that could make the snowball even larger. This is for people who really want to delay gratification. They want to delay fire. Maybe it's not even fire anymore. It's not financial independence, retire early. It's more of a traditional retirement. Those types of investors can enter into tax-advantaged accounts, which typically investors can't really start tapping into easily until they're in their 60s. Although I have a friend, Greg, shout out if you're watching. He's the dividend monster over on Instagram. Hope you're watching, Greg. He's found a way to do it early, and he's taking distributions from retirement accounts. But the benefit of the final lever is it can grow the snowball even bigger, even quicker, because it basically, as the snowball is compounding, it takes the notion of taxes out of the equation. And so that's just, it allows more money infused into the system, more money in, more money out in terms of cash flow. And so that's kind of the fourth and final bonus lever. And so this, in a nutshell, is why dividend investing works. This is why I've been successful at dividend investing. And the hardest part about it all, quite frankly, is just buying a stock, setting it, and forgetting it. And not trying to trade in and out of different stocks, just holding on for long periods of time, where sometimes it seems in the short run like you're watching paint dry, because in the early days up here where the snowball is small, it takes time for it to get bigger. But once the investor is, say, 10 years into the game, it is possible for that snowball to get down here. I kind of feel like my snowball is getting to that point right now. And so it just takes time, but the snowball works. And I'm here to inform you all about that. I love you all. I hope you enjoyed the video today. If you enjoyed the video, please go ahead and click the like button. It's the best way you can thank me. Also, I always enjoy seeing you all in the comments below. I look forward to the lively discussion in the comments below. Quick note to everyone, I'll link to it in the pinned comment below, but on Thursday this week at 7:30 p.m. Mountain Time, I'm now in Idaho. I will be hosting a virtual Zoom meetup on Patreon for the Corner Patreon tier. We will be discussing Peter Lynch's iconic book, Beating the Street, which I think is even better than One Up on Wall Street. If you haven't read the book, Corner Patrons, don't worry. Everyone is invited to join. Check it out in the pinned comment below if you want to learn more. These book clubs on Zoom are well attended. They're a lot of fun. And I have a new Discord server for Corner Patreon as well. This is the year to that I've been investing a lot of time and resources of my own into making Corner Patreon the best it can be. All right, everyone, before I go, in terms of a full disclosure, I'm long air products and chemicals, ticker APD. In terms of a disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just here sharing my experience for fun and entertainment here on YouTube. It's possible to lose money in the stock market, and before you go out and invest in the stock market, please do consult your licensed financial advisor. I'm not offering any advice, just sharing my journey. And you can check out the description below where I have additional disclosures and disclaimers. I truly appreciate all of your support here, the likes, the subscriptions on YouTube. It's the best way you can thank me. And I can't wait to see you all in the next video.